Good morning, traders. It is Thursday, the 21st of May, 2015. It's 8:01 a.m. Chicago time. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. A couple of news items overnight. Nothing too significant. Um, the European equities markets are lower on news from a German paper that the Greek bailout could be extended into autumn. Mayflash HSBC manufacturing for China came in at 49.1 versus 49.3 estimated. This is the fifth consecutive contraction. Further easing expectations pushed equities higher on the Chinese market. U.S. dollar falls 0.5% following Fed meeting minutes, while strong UK retail sales ex autos push the pound U.S. dollar pair higher by about 150 pips. That's a pretty decent move. Both Citi and Goldman Sachs revised higher the end of 2015 Bund yield forecasts. This, of course, caused the Bund to drop. Remember, prices for treasuries are inverted to their yield. U.S. dollar weakness is propelling energies higher. The energy market's been trending higher overnight. And initial jobless claims came in at 274,000 versus 270,000, slightly worse. Continuing claims 2.21 million versus 2.23 million estimated. Looking ahead at the market releases, we have at 8:45, 15 minutes after the open, we have U.S. manufacturing PMI expecting 54.5. We get Philly Fed at 9, just a half hour after the cash open, expecting 8. Also getting existing home sales at 5.23 million and leading index at 0.3%, as well as consumer confidence at negative 4.8. So we have a bunch of numbers coming in together, about 5 of them. Philly Fed, existing home sales in percentages, leading index, and consumer confidence all at 9 Central. And then we get EIA natural gas at 9:30. I have no estimate for that for those who are trading natty gas. Kansas City Fed at 10 Central, an hour and a half after the open. Lots of speakers today. We already had EU's Dombrovskis something. Sorry, I butchered the guy's name. BOE's Whale speaks in London. At 1 o'clock Central, we're looking for Fed's Fisher speaks at ECB conference in Portugal. And at 2:30, Finance Minister English releasing comments. And then at 6 o'clock in the evening Central, we get Fed's Williams speaks on central bank governance. And then the Bank of Japan holds its monetary policy meeting. I think that's already happened. ECB's Draghi and a bunch of others are speaking at the central banking ECB forum in Portugal today. So what does that mean to us? So many people talking today. It just means that news is likely to drive some of the action. To just keep an ear out for news or your news feed or Twitter or whatever you get your information from. Let's have a look at what the markets have done. Sorry about the sniffling. This is the S&P composite chart. This is a 1 bar per day, RTH only, the day session only. This is basically showing the long term, where volume has traded. The profile you see on the right, the vertical histogram you see on the right is price, is volume at each price. And as you can see, we've built quite a decent HVN at the high here. We've been balancing now for 2 days. The market's currently trading the composite LVN of this zone at 21.21. This is a key area right now. We're still looking for this to rotate back lower towards 2100. Um, the big picture, as I covered this Monday on DTR, the big picture test is still 2019. We still have no test of the prior composite balance since we broke higher back in February. We still have not tested this 2019 quarter, and there's an expectation for that. Obviously, that's a little bit more long term than now. So for now, this is what it looks like. We've been in this balance range encompassed by 2110 quarter to 2030 75, and then it expanded to 2019 75, and then now it's expanded yesterday to 2132.25 on that fast pop higher. Yesterday, oops. Yesterday, the expectation was for a chop on the open and then a drop down towards 2119 and what we got here's the 2119. It's the next HVN. So the initial test was 2121. What was expected. The higher probability or hypo one was for it to chop around a little bit because it is opening in value against the prior day's close, basically when the trader bite was going on, and the expectation was for it to rotate down to 2121, 2119, and then to start to tackle 2116, 15, 13, 10, and so on, the levels that we've left behind. What it did do versus the hypo, the plan of the day, what it did do is it opened and very quickly it had a little bit of chop on the open, not much though, and very quickly it broke lower and went straight down to 2120, small pullback, and it hit 19 quarter just a tick ahead of the 19 even. Put in a nuts. It looks like a pretty decent low. You could see the taper in the volume over here. But at the time, it did not look like it's a particularly strong low. But once it moved back up and over the midpoint and back into the OS, the expectation was for it to break the other side at some point in the session, and it did. It chopped around in the middle against the Tuesday low, back and forth, back and forth, back and forth, until it finally broke higher on the Fed announcement up to 32 quarter, and then it gave all that up back to the scene of the crime on the Fed announcement, which was about 21-24, back to the scene of the crime, and it basically got stuck there. Swift rejection up top. I believe this is a pretty decent high here. Pretty decent high that we have here. I believe it could more easily rotate lower now. I know I said that yesterday. It did rotate lower, so the trade was correct. The hypo was correct, but it was very short-lived, and there's just no way to predict what the Fed minutes are going to do. So, but with this type of action, this is an excess high. It's not the greatest excess high, but it is an excess high. Very little volume up there, quick and very swift rejection back. The expectation is for 2115 today. Looking for 2115 to be tested, and for the longer term or the 15-minute bar chart levels to be tested. 2115 right here, 2110 next. That's what's expected for today. So I expect us to take back some of this, the key target below being 2111, 2110 for today. It's only 10 points away. It's very, very much doable. So that's the primary hypo. But before we arrive at that conclusion, of course, we got to check the overnight, which has dropped right off the open and then has drifted upwards up till now. So it's likely to push this 2175 and so on. But I still believe, I still see evidence that it's likely to encounter resistance on the way up. I believe sellers were activated somewhat yesterday, not too aggressive. The rotation down was not all that big. It was about 10 points. But still, I see an opportunity for sellers to step back in at these higher prices and rotate this down to go fishing for real buyers down below. So on the open, it's likely to push up, take out this overnight high, and attempt higher. But until it exceeds 21.26 or so, 21.27, I'm looking on the short side this morning. Again, targets 21.15, which happens to be the overnight low. That's not a coincidence. 21.15, 21.11, 21.10 are targets below, and then we work ourselves down one level at a time below that. So 21.10, and then we're back into the Fed range, the NFP range, 21.01 being the next target down. And we have a gap here, a gap in range between 21.03 and 2094.50. The ultimate goal in this rundown, if it does happen, is 2094.50. Okay, so that's the layout, that's the context, and that's the primary hypo. I'm going to scan through very quickly through some markets that are fairly relevant here. This is the U.S. 30-year bond. Very interesting trade lately. All the treasuries are, as more and more talk of takeoff on the interest rates, and you can see here very clean and clear impulsive move down that had its continuation. Pretty strong selling days when they do happen in the bonds. Currently sitting sideways and putting in a weak low. It is consolidating in this low area. A correction normally bounces up fairly quickly, so the expectation is for this low to bounce up, a higher low, and for the correction to about 50% at least was expected. But here it looks like it is likely to continue lower on the U.S. bonds. Therefore, long-term yields expected to go higher. Again, that's in line with what the Fed's been saying anyway. On the 10 years, same thing, an impulsive move down, but it looks like it got its continuation and it's consolidating. Yesterday, it continued to creep up. These bars here, this is a 15-minute chart. If you recall yesterday, it was trading somewhere down here when I said I'm expecting 127.23 to be tested. That's the point of control, the VPOC of this composite zone of this balance zone, which I need to extend. Let me extend that to yesterday. There you go. And it did hit the 127.23 and pushed through by 5 ticks. So that target was achieved on the 10-year, and it's sitting sideways here. I'm not seeing the type of action you would expect, or I would expect, when we have found buyers. I think this is likely to give it up on the downside and continue to seek buyers as part of its auction. Crude oil, real quick. Continuing the theme of treasuries, the Bund, like I said, Citi and Goldman Sachs came in and issued a report predicting that yields on the Bund are likely to be higher by the end of 2015, and that, of course, causes this German 10-year note to drop for higher yields, an expectation of higher yields. But overall, same story here. Impulsive move down. Looks like it's corrective. It's trying, but it looks like it is weakening, and the expectation is for this 151.44 to be retested and for it to go. So I'm looking for opportunities there. Although I don't watch that market as closely. Here's the drift up on crude oil. Again, as I talked about for the last few sessions, crude oil, I'm expecting it to start making its pull back a little bit more, because it did hit the 50% of the pullback there, or that's part of the reason. And the expectation is for it to start to rotate back up and take out this last high put in at 64.60 or so, and to continue to push through 65 and to start filling the composite low volume node. and today is a bit of a rally day in response to a weaker dollar. So that's it. That's the roundup for today. Again, monitor your risk. Watch what you're doing. In other words, don't put yourself in a position where you're becoming overly defensive and taking on emotional damage and losing confidence. It is much better to take the loss, lose the cash, and retain your confidence in yourself and that you will take yourself out of a trade when things aren't working in your direction or as expected or planned. It's much better to do that and take the dollar hit over the confidence and emotional hit. I cannot overemphasize that. It's just important to. It's much more difficult to regain your confidence, much more so, in my opinion, than to gain back the funds that you've lost by earning them back. So don't mess with it. I see a lot, I see a lot of people committing to positions and defending them when they're not defensible, especially in products like the Russell and thinner products like crude oil and so on. Don't do that. It's not a sustainable plan. Good luck to you, and I'll catch you tomorrow. Take care.